While inflation having an impact, going to have more of an impact, I'm afraid. Numbers out from Experian today showing more people are using unsecured credit really just to get through the month. Jaco van Jaarsveldt is the Chief of Strategy and Innovation at Experian Africa. Jaco, good evening. Okay, different sets of numbers, different things happening in different parts of the market. What can we see about people who are using credit really just to get to the next paycheck?
Yes, Stephen, and thanks for having me. We've seen a significant increase in the usage of credit cards, especially across the more affluent segments of the market. It's a function of financial distress or increased financial distress, which we've observed in the two most affluent segments of the market, which typically the two market segments, the luxury living and aspirational achiever segments, that's most exposed to secure lending as well. And they've typically been the target of lenders and banks post-COVID, from a lending to existing customer perspective, and they've got multiple credit cards. And these credit cards aren't your typical 20, 30, 40,000 Rand limits. These are 100,000 Rand plus limits, multiple cards of those limits, and we've seen a significant increase in the utilization of those limits.
I mean, if you're using credit cards with limits like that, and you've got several of them, there's really no way you're going to get out of debt anytime soon. I mean, you'd literally have to win the lotto.
It's right. The usage of unsecured credit, even in the personal loan space, has increased significantly. And again, especially in the top end of the market, which typically it's not been the case. This has only happened post-COVID, where we've seen a significant increase in the drawdown on home loan facilities, and then also an increase in unsecured secured exposure limits, which resulted in the banks effectively reducing supply. And as a result, we've seen a significant improvement in the home loan CDI specifically, which is a combination of lower interest rates and people being able to pay more, but all more a case of lower supply. However, with the lower supply of facilities on the secured lending front, consumers have been using the unsecured credit facilities more. And you're 100% right. It is actually a difficult situation for consumers to get into. And listening to your previous speaker with the potential risks of state or no more interest rate increase or interest rate decreases in the near future, and potential increases, it is actually a concerning state of affairs, specifically for the top end of the market, which is your most credit active segment of the market.
Normally you would think, okay, mortgage holders, fewer of them defaulting, that's very good news. That's quite encouraging. But we all know that everything's about to change.
No, that's right. The fact of the matter is that the South African consumer, even if you look at the positive news or the positive indications that came from the recent budget, we had a conversation on another show regarding the budget and unpacking it. It's great at a macro level, but when you take it down to the consumer level, the consumer in South Africa remains significantly distressed. The interest rate sensitive components of the market, as I said, has been an improvement in the home loans default rates from a consumer default index perspective. But those default rates are it's a dual function, as I mentioned. It's not only people paying better, but there's a huge drawdown on unsecured facilities and more access to unsecured facilities. Equally so, the less affluent segments of the market have been accessing unsecured credit on themselves more, even in the retail store card space, where we've seen more retail supply of retail credit happening over the festive season last year and around Black Friday and the festive season. And we're seeing those defaults increasing, which paints a picture that the South African consumer, irrespective of the macro environment pre the Iranian war, looking like it's improving, the consumer remains under significant distress.
Jaco van Jaarsveldt, thank you. Chief of Strategy and Innovation at Experian Africa.